Bourse Report. I am Marjorie Siberan, and I'll be sitting in for Soro today. Today, we look at the 9-month performance of the local market. It's been another tough year for the local market. Market down 8.6% this year, following 3 years of declines in the last 3 years. Since the beginning of 2022, the market is down over 30%. The Jamaican market has suffered a similar fate. This year it's down 3%. Last year it was up 3.1%, but the previous 3 years it was also down. The one market that's shown some resilience is the Bayesian market. Over the last 3 years, it's been in positive territory. Unfortunately, this year it is also down almost 2% in the first 9 months of the year. Looking at the key market movers on the positive and negative spectrum, yes, Brighton has been very successful since it launched. It's up over 100% of the last couple of months. It listed in the local market at the end of August. LG Williams B is up 57%, Unilever 19%, Prestige 20%, and Quebec 22%. Some of these companies have benefited from strong top and bottom line performance. Prestige has benefited from the takeover bid of Agostini. On the other end, we see Whitco and One Caribbean Media continue to struggle from poor performance in the current environment. TTNGL, another tough year for the company. It's down almost 44%. The company continues to struggle from the weak environment, slow earning growth, continued provisioning for deterioration in capital values of the underlying entity, as well as inability to pay dividend, which has been a strong influencer in the underperformance of the company. And so Macau is down 33%. The company did disclose it earlier this year that dividends will not be paid for a few years as the company seeks to invest the cash flow into long-term growth opportunities. In terms of trading activity on the local market, so looking at the 9-month performance, looking at traded volume and traded value, we've seen a jump both in the traded volume and the traded value. Traded volumes have jumped from 58 million to 88 million shares traded in the first 9 months of the year. Traded value is up 28% year on year. Now, the third quarter of this year has been a changing factor. When we looked at traded volume in the third quarter, it was almost the same value that traded in the first 6 months of the year. In August, for instance, the month recorded traded volumes of almost 24 million shares. As well with traded value as well. The traded value in the third quarter was almost similar to what was traded in the first 6 months of the year. So the strong third quarter, the hope is that it will continue into the last quarter this year, and we could see an improvement overall from what transpired last year in the local market in terms of volume and value. On the other side, the performance of this year, the positive is welcome, but when we look at 2022 and 21, still some ways to go. In terms of market capitalization by sector and the performance of sectors over the last few years, we've seen a decline in most of the sectors in terms of market cap, with the exception of the trading and property segment, and primarily trading segment. The trading segment has grown from 2.8 billion to 9.3 billion in terms of market cap, and this primarily because of the improved performance of Agostini, as well as, this year we've seen the introduction of AS Brighton into the sector as well. The two major sectors that comprise the market capitalization and make up the market capitalization, the banking and conglomerate sector, which account for 75% of the market cap, their performance have been in line with the overall market. The one performer that's been struggling is the energy sector, which is comprised only TTNGL. We see the market cap fall over 80% from 2.4 billion to the current 300 million. So that sector definitely has suffered significantly over the last 5 years. The non-banking finance sector market cap has fallen over 40%, and the manufacturing sector, the other weak performer, that market cap has fallen over 60% as companies such as Whitco, Angostura, and One Caribbean have struggled in this current environment, challenging as it is. Looking at the asset of banking and insurance companies, I just want to highlight potential impact of the asset levy that is due to be implemented in upcoming months. It is going to have some impact on companies that are listed on the local market. When you look at the total assets of these companies that are operating in our jurisdiction, it's around $221 billion at the end of June. And when you apply that 25 basis points tax asset levy, it translates to roughly $550 million using June 2025 asset values. Two of the companies we looked at in terms of what the impact could be on their earnings is Republic and First Citizen. And Republic, just using the asset base at the end of June, it should result in approximately 85 cents hit to earnings, and for First Citizen, around 37 cents hit to earnings. And when we look at the next chart, this could impact on PE multiples going forward. Currently, the PE multiple is 9.4 for the banking sector. We expect with the hit in earnings, this could go closer to 10, probably over 10, holding all other things constant. Dividend yield currently stands at 5%. This could also take a hit because if these companies are taking a hit on their earnings, they maintain their payout ratio, dividend payments will be reduced, and as a consequence, dividend yields will fall. But we do think it should be close to 4.5, probably higher than that, depending on what initiatives the banking sector implements to kind of mitigate some of the hit of this asset levy on the bottom line of the company earnings. The next sector we wanted to take a quick look at is in terms of dividend yields in manufacturing sector. The dividend yield currently stands at 5.6%. Now, this is a bit higher because of the trailing dividend yield of Whitco. We expect this to fall, so this dividend yield should fall closer to 5%. But despite that fall and even a fall in the banking sector, we do think dividend yields on average 5% is much more attractive than definitely what you are getting on savings deposits, mutual funds. Their yield is around 2 to 3%, and even fixed term deposits are not as high as the 5% level. So the dividend is still relatively attractive to other offerings on the market. Just quickly, the multiple for the trading sector, 26.8, is impacted by the AS Brighton dividend PE, which is closer to over 40 times as the company's share price has jumped over 10%, 100%. Looking at some of the market drivers for the securities going forward, macroeconomic conditions will continue to impact the companies. Our subdued economic environment where we see IMF expectations for GDP growth of 1% this year and 1.2% next year would continue to impact on companies that operate in the local environment. On a positive side, we do see resilience to earnings. We've seen many of the companies in the banking sector and some of the other sectors continue to register year-on-year growth, be it single digit, but positive growth nevertheless. Valuations, as the previous graphs would have shown, fairly attractive on a relative basis, and even going forward, still relatively attractive. PE values in one metric we looked, but when we looked at market to book as well, the underlying value is still, some companies are trading at less than 1 time book, which is very attractive in the current environment. Dividend yields, as I mentioned, very attractive compared to other offerings in the current current environment. So that's a net positive as well. And built-in diversification, many of the companies that operate in Trinidad and are listed in the local market do have operations external to Trinidad in jurisdictions such as Guyana, which is doing very well, Eastern Caribbean, Barbados, where the economies have picked up after COVID, and the companies that are listed locally have been benefiting from the better performance in these entities and that diversification. Some of these companies earn over 50% of their net profits outside of Trinidad, so which is a net positive. And one other positive going forward, any potential devaluation of the dollar would be a benefit to these companies. So as we look outside Trinidad and as we look medium to long term, we do think there is value in the local listed companies, and there is opportunity for the investor with the long term perspective. So that's it for us this morning. Thanks for joining us, and do have a wonderful investment week.